Ever wondered what the train law means for you as a taxpayer? Welcome to our journey through the tax reform for acceleration and inclusion, or, as it's more commonly known, the train law. Officially christened as Republic Act No. 10963, this law was set in motion by President Rodrigo Duterte on December 19, 2017, and took effect from the first day of 2018. The main engine driving the train law? To cut down income tax rates, thereby increasing the take-home pay of Filipino workers, and to streamline the Philippine tax system. Key stops along this route include a reduction of income tax rates, broadening the value-added tax to include items like sugar-sweetened beverages and cosmetic procedures, and the exemption of certain essential drugs and medicines from VAT. On top of that, it also simplifies the processes for donors and estate taxes. In the next few minutes, we'll unpack the key provisions and impacts of this law. First off, the train law reduces personal income tax rates. This change is a breath of fresh air for taxpayers, as it adjusts the tax brackets to give relief to many. Now, individuals earning below a certain threshold are exempted from paying income tax, a major win for those who are struggling to make ends meet. For those who find themselves in higher income brackets, the tax rates have been lowered, meaning they get to keep a larger portion of their hard-earned money. This isn't just about numbers on a tax form. It's about real people being able to put food on the table, pay for their children's education, or save for a rainy day. By reducing the personal income tax rates, the train law is putting more money back into the pockets of Filipinos, fostering economic growth and encouraging financial stability. This provision lightens the tax burden for many Filipinos. The train law also modifies the value-added tax, or VAT. This isn't just about numbers on a spreadsheet, it's about the everyday items you buy and the services you use. The law extends VAT coverage to goods and services that were previously exempt. This includes certain sugar-sweetened beverages, some cosmetic procedures, and even the lease of residential units with a monthly rental exceeding a certain threshold. Now, you might be wondering, why the change? Well, expanding VAT coverage is a strategic move designed to increase government revenue. The additional funds can then be funneled into infrastructure and development projects, benefiting the country as a whole. Yet it's worth noting that certain essential drugs and medicines remain exempt from VAT, a provision aimed at easing the financial burden on the public. So you see, the train law's expansion of VAT is a complex balancing act. This part of the law aims to boost the government's revenue. Excise taxes also saw changes under the train law. With a focus on certain goods, the law hiked up the taxes on items like petroleum products, automobiles, sugar-laden drinks, and tobacco goods. But why, you may ask? Well, the reason is twofold. Firstly, these increases in excise taxes are designed to generate additional revenue for the government. As we all know, funds are necessary to support infrastructure and development projects, and these tax hikes provide a significant contribution. Secondly, the law aims to discourage the consumption of unhealthy or luxury goods. By increasing the cost of items such as sugary drinks and tobacco products, the hope is to steer the population towards healthier choices. This is not only beneficial for individual health, but also reduces strain on the healthcare system. So, while these tax increases might pinch the wallet a bit more, they serve a broader purpose. These tax hikes are set to generate additional revenue and discourage unhealthy consumption. But what about those who are most vulnerable to these changes? Let's delve into the social mitigation measures included in the train law. The government foresaw the potential impact of the tax reforms on low-income earners and incorporated provisions to alleviate this. One such measure is the unconditional cash transfer program. This initiative provides financial assistance to the poorest households, helping them cope with the initial shock of the tax changes. It's a safety net, ensuring that no one is left behind in the pursuit of tax reform. Another significant provision is the Pantawid Pasada program. This program is designed to offset the impact of fuel price increases on public utility jeepney drivers. It offers fuel vouchers to help these drivers manage the increased costs brought about by the reforms. These measures are not just about revenue generation, but also about fairness and inclusivity. They serve as a testament to the government's commitment to support those who may be disproportionately affected by the tax changes. These measures aim to cushion the impact of the tax reforms on low-income earners. The train law also brings changes to the estate tax system. Now let's dive into the specifics of these amendments and the simplified estate tax amnesty that was introduced. The first change to note is the increase in the threshold for tax exemption. Prior to the train law, only estates valued at 1 million pesos or less were exempt from the estate tax. With the new law in place, this threshold has been significantly raised to 10 million pesos. This means that estates valued at 10 million pesos or less will not be subjected to any estate tax, making it a major relief for many families. Now let's move on to the changes in tax rates. Previously, estate tax rates were as high as 20%. The train law, however, has made the tax rates more progressive. Today, estates valued over 10 million pesos are taxed at a flat rate of 6%. This is a significant reduction from the previous steep tax rates. But that's not all. The train law also introduces a simplified estate tax amnesty. What does this mean? Essentially, it provides a one-time opportunity for heirs to settle their inherited estate tax obligations at a reduced rate, without having to worry about penalties. This amnesty covers estate taxes that have remained unpaid for deaths that occurred on or before the end of 2017. So imagine a scenario where an estate has unpaid taxes from years past. Thanks to the simplified estate tax amnesty, the heirs of this estate now have a chance to settle these outstanding tax obligations at a much lower rate without the added burden of penalties. These amendments to the estate tax system, coupled with the one-time estate tax amnesty, aim to make the process more fair and less burdensome for the heirs. It's a significant step towards the overall objective of the train law, which is to make the tax system more efficient, fair, and easier to navigate. These changes make the estate tax system more progressive and offer relief for heirs. Lastly, let's look at other key provisions of the train law. We'll start with the expanded coverage of value-added tax, VAT, to include the lease of residential units. Prior to the train law, the lease of residential units was exempt from VAT. However, under this new law, if the monthly rental of a residential unit exceeds a certain threshold, it will now be subject to VAT. This provision encourages fair taxation while helping to generate additional revenue for the government. Moving on, we have the tax relief measures for small and medium-sized enterprises, or SMEs. Recognizing the crucial role of SMEs in the economy, the train law provides them with some much-needed relief. This includes lower income tax rates and simplified tax compliance requirements. By reducing the tax burden on these businesses, the law aims to foster their growth and development, ultimately contributing to economic progress. Lastly, let's delve into the tax administration reforms. The train law introduced several measures aimed at enhancing the efficiency and effectiveness of tax administration. One such measure is the adoption of electronic invoicing systems. This move towards digitization not only simplifies the process of tax compliance, but also improves accuracy and transparency. Additionally, the law includes measures to combat tax evasion and smuggling. By strengthening the enforcement of tax laws, it ensures that everyone pays their fair share. In essence, these provisions aim to streamline the tax system, promote fairness, and support the growth of SMEs. They reflect the overarching goal of the train law, to create a more efficient, equitable, and growth-oriented tax system. It's a complex piece of legislation, but understanding it can help us appreciate how it affects our lives and our country's future. As we navigate the ins and outs of this law, let's remember that its ultimate goal is to serve the greater good of the Filipino people. These provisions aim to streamline the tax system and support the growth of SMEs. So what does all this mean for you as a taxpayer? Well, let's recap. The Train Law, or Republic Act No. 10963, has brought some significant changes to the Philippine tax system. It reduced personal income tax rates, putting more money in the pockets of Filipino workers. It expanded the value-added tax coverage to include items like sweetened beverages and cosmetic procedures, while exempting certain essential medicines. The law also increased excise taxes on goods like petroleum products and automobiles, with a focus on discouraging consumption of unhealthy and luxury goods. To balance this, social mitigation measures were introduced to support low-income earners. The estate tax system was restructured, simplifying processes and introducing a one-time amnesty. Small and medium-sized enterprises received tax relief, and the law also aimed at improving tax administration. Understanding the train law is crucial in managing your tax liabilities and financial planning.